Hello, investors. Welcome to the channel where I use technical analysis to find possible swing trades. Before beginning, I'd like to make it clear I'm not a financial advisor. Everything I say is for informational, educational, and entertainment purposes. Technical indicators like those I use here are not accurate 100% of the time. Company fundamentals and macroeconomic factors can drive share price changes differently than what we'd expect based on technical indicators. My goal here is to bring these companies to your attention so you can decide for yourself whether or not they're good investments for you. So please, if you plan on investing, do your own due diligence before purchasing shares in any company or consult with a financial advisor. And with that said, today we're taking a look at Amerisource Bergen Corp, ticker symbol ABC. This will be for a shorting opportunity because it looks to me like the company has extended a little high beyond its value. This is a mid-cap company worth around $38 billion. It's in the healthcare provider and services industry. And here we are on the annual chart. You can see it is way above all the moving averages. In fact, it is right at its 52-week high. And this is, if you care to look back at other charts, you'll see that this is its all-time high. They had this great big stretch of green days, pushing the share price up and up and up. It's just below 189 at the moment. And the RSI is nicely in the overbought zone and is starting to flatten out. Both stochastics are deep in overbought and have started to turn back south again. We have, as you might suspect, the volume showed a mild rise, but mostly green. And now we're seeing a decline in that buying volume. And the MACD has reached a peak and is starting to fall, though we haven't had a bearish cross yet. Now, I like to go over and take a look at the fundamentals just from a very cursory view here, of course, but it could help broaden your understanding of the company. And with that in mind, we have a small short interest here, less than 3%. Now, the debt to equity ratio is a problem here. You'll notice this debt to equity at 17.51. That is shockingly high. And it indicates that it is higher, in fact, than 91% of other companies in the same industry. And if we scroll down here to the PE ratio, you'll see it is a bit on the high side. It indicates here that it is higher than 75% of other companies in the industry, which supports my opinion that the company's valuation has become a bit high. And if you take a look at this price to book value here, almost 135 times. That's insane. So take that for what you will. The gross margin here is less than 92% of other companies in the same industry, and the operating margin is average. So this very low gross margin combined with the average operating margin again supports the idea that this company is overvalued currently. Now, I'll also point out that the operating margin says is average, but it's less than 1%. I mean, this is an exceedingly narrow margin here for profits. Any screw up on their part, and they'll be losing money. Or even worse, as we've seen over the last couple of years, any problem in the supply chain, any rise in equipment costs and such, and this operating margin could vanish. And if we scroll down here, the return on equity here, it says it's best in class, the 100 percentile for the industry. However, it's so high that I suspect this is some kind of flaw. This is accounting magic or something weird going on here. It's so high, I don't trust it. You know, get a 388% return on equity from a medical equipment and supplies company. That's just too suspicious for my tastes to take that at face value. And the growth rate is apparently above average. beating out 62% of its peers. So that's a little ray of sunshine there. And the dividend is low, just over 1%. And that is less than 60% of other companies, which is kind of what you'd expect. It's a little bit below market average. The payout ratio, though, is below 25%. So the dividend is secure. So overall, I think AmerisourceBergen here is set for a pullback, at least a mild pullback. Doesn't need to be huge, but yeah, if we got pulled back to 175 range or so, you could make a nice 10% profit if you were to short it. And I will also point out that I did check out the options. So if you chose to short this by pair call spreads, you could turn a nice profit on those too. So in any case, please let me know what you think of AmerisourceBergen Corp. And if you got something out of the video, I'd appreciate it if you hit the like button and subscribe to help out the channel. If you enjoy these brief overviews of companies that might be good swing trades, please leave a comment for the YouTube algorithm. And if you'd like to tell me that I don't know what I'm talking about and you have a better view of a particular company, then you can leave those comments below as well. Or if you'd like me to take a look at a specific company for you using these indicators, then mention that and I'll get to it as soon as I can. That's all for today. Thanks for watching and good luck with all your investments.